What I wanted to show you today is the MMFI index, which is our stocks above the 50-day moving average. Look at these nice highs that are starting to connect through here. You're starting to get a bit of a triangular action. All right, see this massive triangle, which means at some point we're going to have to break above or below. Right now, at the moment, we're kind of trading at the average. We're breaking below, above, but we're still right in and around that zone. So we're looking for some direction. Market right now is neutral as it stands from this MMFI reading, and that to us is very interesting indeed. Okay, if we look at the calendar of what's taking place last week, we had a little bit of news out of the United States. Non-manufacturing PMI was an interesting one. The FOMC meeting minutes, nothing surprising, but there is news out there of a flattening yield curve. And we're going to do a quick little 2-minute piece on that. It's very important that you know what it is. It's signaling some bearishness in the markets, unfortunately. What else was there? Unemployment claims in the U.S., and then Canada ended off with unemployment as well. Overall, not a bad news for economic releases, but this week coming up here is going to be prime time. You can see there's a lot of news coming out. Tuesday, out of the U.S., core retail sales drives a large part of that economy. Wednesday, Canada, Bank of Canada's monetary policy, ECB as well as doing a press conference. There's going to be a lot of policy-wise talk, interest rates, economic growth for the Eurozone and Canada. That's what the focus is going to be on Wednesday. Thursday, United States unemployment claims as usual, and then Friday, a slew of data for CPI. And CPI is a consumer price index basket which measures essentially, in short form, inflation. And the reason it's important to measure inflation is because that's what the Federal Reserve is using to benchmark their decisions whether or not to raise interest rates. They've already said it probably won't happen in June. We're looking at a September policy meeting for an increase in interest rates. But if inflation remains low and the yield curve continues to flatten out, they're not raising interest rates in 2015. Okay, they're going to wait till 2016. So no matter what they say, no matter what the language is out there, interest rates are going to remain lower for extended periods of time, even though they're saying they're going to start raising them. I don't believe it. I don't buy it. Anyways, that's the news front. There's a lot of stuff coming out. Next thing I wanted to show you is the yield curve, and then we'll start looking at some stocks. So we've got a lot of trade setups to look through today. Here's what the yield curve means and implies. All right, if you have a chart here, all right, and this here is time, and this is yield. So think about yield as a percentage. And what these yields are treasury bonds. So these are government bonds. When the government needs to finance their operations because they're running a deficit, okay, if they're running a deficit, it means you don't have enough money to finance your budget. You got to go in the market, issue bonds, and collect cash. All right, and who purchases these things? Formerly, China buys a lot of these treasury bills. Japan's bought a lot of them. And really, you raise money by selling a part of your debt out to other countries. And that's the benefit that the U.S. has. They could do it in U.S. dollars. They're the only country that could issue sovereign debt because they're the reserve currency country. Okay, so here's how it works. If, for example, this is a percentage, let's say this is 1%, 2%, and 3%. Okay, on this y-axis here, it's all percentage. On the x-axis, it's time. So let's say 5 years, 10 years, 15, and it's not to scale here, 30 years. So here's the thing. If 1 year gives you for 5 years gives you about 1 to 1.9%, and then a 10-year gives you 2%, 15 years is slightly more, and 30 just flattens out. What you're starting to see is a yield curve basically as time goes up or increases, the longer that you finance debt for, the longer that you allow this government to use your cash, the more interest you're expecting to earn, right? And that makes sense. This yield curve has a positive slope. It starts to flatten out around 30, which makes sense. All right, this is a healthy market. When the yield curve looks like this, the markets are looking good. The problem nowadays is it's starting to flatten out this yield curve. It's starting to look more like this, which means the following. Whether or not you're lending or borrowing the money out for 5, 10, 15, or 30 years, the yield rate is approximately the same. And that means that people do not trust the market. They're saying, why in the world would I let somebody borrow my money for 30 years? I don't care how much return I'm going to make. I don't believe that that's a good investment, regardless of a higher interest rate. All right, that means that's bearishness. And this is what the yield curve is starting to look like. It's starting to flatten out. It should look like this, but it's starting to look like this. And a flat yield curve is bad news for the overall equity market. So I just want to let you know that. And guess who's watching this? The Federal Reserve. Okay, the Federal Reserve is keeping close tabs on this as well and saying, interesting. People are not willing to put their money or lend their money out for longer periods of time, whether it's they don't trust the system, whether they don't trust the place that they're lending it to. There's some lack of trust there and a lack of willingness to commit to a longer term for higher interest rates. That's a very interesting development. If you see a yield curve that goes negative, oh boy, that's trouble. But right now, it's actually flattening out. It's a very important indicator for the markets. We could start to see some bullishness in the near term to midterm, the next couple of months at least. Okay, so keep that in mind. Does anyone have any questions on the yield curve? Does it make sense? Why would you want to lend the government money? That's a good question. You're lending the money to basically go out there, create infrastructure, invest. All right, invest the capital to run their budget, whatever it might be, social security, things like welfare, government-run insurance in Canada, that's all public. In the U.S., it's privatized, so it doesn't make as much of a difference. But yet, they still find a way to spend their money through Medicare and Medicaid, all right? So the government has expenses that they have to really finance. There's two ways to do it, tax, or another way to do it is to issue bonds. And if you're not pulling in enough money from tax from the citizens, well, guess what? The other way to do it, the other avenue is bond. And the way that bond works is you're saying, I'm going to lend you 30 years, and I want to earn a 1% return each and every year for those 30 years. Okay, so you're giving the money to the government. In the 30th year, you get your money back plus all this interest you've accumulated on an annual basis. Okay, so that's the problem. People don't trust what's going to happen in 30 years' time. All right? They're expecting interest rates to stay the same. They're having an unfavorable look on the economy. All things being equal, if it's a good and strong economy, you expect, if you're lending it for 5 years, you'll take, let's say, 1.5%. If you're lending for 30 years, you want a lot more return because you're tying up your money for that longer. Okay, so, yeah, makes sense. Perfect. And guess what? For tax, there's a curve that looks like this. So look, last thing here, tax rates and the amount of people, sorry, the other way, taxes down here, the amount of people that pay it. As tax increases, believe it or not, the amount of people paying it will stagnate, which means you could raise tax up to 80%. Guess what's going to happen? Nobody's going to file their taxes. I'm not paying the government. Come and get me. And what's going to happen? All right, problems. And that's why increasing tax rates is not an indefinite type of measure. That's where it gets interesting. Okay, so there you go. Government financing 101. You need to know that because it's very important. That flattening yield curve has huge implications in the marketplace. Let's look at some trades because that's what we're here to do at the end of the day. Let's have a look at the indices. Let's fire up Trade Navigator. Here we go. Equity markets, how are they looking? We're sideways here on the Dow Jones. We are starting to connect some higher lows, which is in turn a way of saying there's support going on here, but as well we're failing at these resistance levels, which means it looks a little bit like an ascending triangle. All right, Friday volume started to come in on a bullish day, and the question now becomes when do we escape out of this little triangle and ultimately close at a higher high? All right, I'm not going to be the one to come out here and say right in the middle of this consolidation it's time to buy, because guess what? We saw that here as well. And what happened? Well, a month later, we're still at the exact same spot. So I'm not that naive, but I will notice that there is an upward sloping support line and a bit of a resistance that's looking horizontal. Okay, on the S&P 500 here on the second chart, same deal, except this looks a bit more like a wedge, okay, a rising wedge. And a rising wedge is a terminal pattern in technical analysis, and here's a support. So it came really close in the last couple of weeks to touching that support, but it didn't break it. It's still holding, and now on Friday, volume's coming back in. All right, CompQ or NASDAQ, we're going sideways. We're stuck in this little consolidation, and really, if we get above it, we can continue upwards. If not, we're going to pin in this range, and there's nothing we can do about it. All right, Russell or the 2,000 smaller cap stocks in the overall market is pacing upwards, but it too is doing a nice little rising wedge here. So if I had to look at these markets holistically and overall, I would say, yeah, they're looking like they're starting to push a little bit bullish, but don't forget that even though it's bullish, it's still within the confines of a potential terminal pattern on all of these guys. All right, and that's reason to worry for sure. Because if we get south of these support levels, there's going to be a sell-off down to the key trend lines, and that's a couple 100 to 1,000 points on whatever index you're looking at. Okay, the one we track with most often is S&P 500. So let's do some further analysis and digging into that one. Let me just pop it on the screen here. It is S&P 500. You could see last week we ended the week on a bit of a rally with increasing volume. Bollinger Bands are starting to open upwards. Moving averages of the 100-day was a perfect support. Close above the 50 and momentum starting to turn. MACD here is crossing, and stochastics are getting higher lows. So we're starting to gain momentum to the upside. Not ready to go long call options here. Definitely not. Especially because in the next week here we have so many economic events. We have so many earnings starting to kick off. It would be pretty much suicidal to buy call options at this point outright. Okay, if we had some more time to do options, I know you guys haven't had a chance to get through all the lessons. We could do some neutral strategies here like iron condors, which still makes sense. And we're not going to get there, all right? We're going to do a bit more of a slow start. But we do expect that by the end of May, you guys watch all the options course videos. We're going to get full-fledged into options trading, like all out. Every strategy we talked about, we're going to start utilizing. All right, if you guys have any questions, shoot. Now's your chance. If not, have a great evening. This will be up in the archive in the next 20 to 30 minutes tops for you to watch and review. We got 4 trades we're tracking with, and I'll have updates for you the next couple days. Adios. Have a fantastic night. We'll talk soon. Take care, guys.